So let's record a new video, because why not? For now, I still will record all the videos, upload them all on YouTube. Soon they won't all be on YouTube anymore, but more on that later. For now, I wanted to go over this trade where, basically since I've taken it, I've been sharing my views every day. So it should not come as a surprise what happened the past few days, because every day we had an update. But right now we can see that my main objective has been hit, which was this supply and the weekend liquidity. After we deviated the range lows last Sunday, there I took that trade right there with the white stop, just to give it some room to play this potential deviation. Current stop is at below that low, but I've already taken a lot of out, so I'm basically risk free. So delete that. And then I wanted to see a reclaim of the range. Well, we got the move back in the range. We saw that buyers stepped in right there. Then on another test, buyers stepped in once again, defending the range low, in which you have your initial range low, your deviation, and then basically this retest of the range low, which is like the initial range level, held multiple times, and then shoot up higher from here. And then this morning, let's delete those. This morning, let's delete the volume profile for a moment. This morning we even had a local reaccumulation, which I shared in the Telegram group. I did not take it, or at least I missed it. But if you look at just your range, we know you can draw your range from high to low if you are trending up. So if we look at structure from the low up, you have low, high, higher low, higher, higher low, higher high, and then here you have your low, and then you go sideways. So it doesn't make too much sense to draw your range at every point, like here and like here. You only want to draw a range when you see sideways price action and not trending. So here you had trending price action, but here you see that it's not trending anymore, but sideways. So then you can pull your range from high to low right there. I know people will say maybe you draw it wrong. I don't care. This is how I do it. Here you have initial range high, initial range low, tap one at the lows, extend the range. What is price doing? Are we deviating the highs? Then you look for potential distribution models, but we are locally in an uptrend. My bias was bullish, so I'm looking more for accumulations instead of distributions. Let's see, maybe we even had, on the 2 minutes, it's not too clear here, but you had some demand aligning here. Right there. But if we look at just the range high, range low, then what does price do? Price takes out the range low, comes back in your range. The moment you get acceptance back in your range, you can extend your range basically to that new low, in which you now have tap 1, tap 2, price comes into this local demand that was left behind below the range low, does not close below your deviation threshold, which is now the range, the red line here, and that is also why you move your range to your second tap once your second tap is confirmed, because then your range low becomes to that lower level. So you have here move into below your range low into demand, above your range deviation, move back in the range, aka a valid third tap right here, which you always need to have local structure on your hand. So if we look at structure right here, you had low, high, low, lower high, lower low, 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 high, low, low, lower high, lower low. So to break this to bullish, you need to break above that high. So at this moment, you broke your structure to bullish break of structure, but are you going to enter at your mid-range right here? Oh, that's the wrong tool. Are you going to enter here at the mid-range after such a pump here? Stop loss has to be that third low, and then your target technically is the range high. This is a 0.9R trade. That's not that good. So I would not take that. And it was also during the night, so I was not awake. But what I saw was that we had R1, R2, R3. Here we had a nice return to zone all the way up into that range high, which makes it an easy way up. And we can also see that this move was pretty aggressive. But right here, price started to move back. And because we already broke our structure here to bullish, technically your technical target is the range high. So what price does here is that it slowly pulls back while leaving a really nice return to zone right here, which can also give you a easy rotation back up. And this is the perfect example of what you want to see when you have a good return to zone that's like this, and then you can get that quick move up. What you don't want to see is that you come into your PY with a move like this, because then you don't have a good structure to take a trade. Yeah, you can say take this break structure, but this is basically new supply, so that's not what you want to see. Like this is no supply, all liquidity, so that's a really good PY to look at. So since we are in an official, like a confirmed model 1 accumulation, we can look what is price doing. And what I saw was that here at your extreme point, of course this was also some demand, price came into it, did not react from it, but at the extreme point we had a 1 minute OBIM left behind here, right there. This was our third step, almost equal lows. But if we look at how this price came into it from here, low, you can basically say this low, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And this technically, here we had a, I got a question, this is technically like, here, lower low, this is technically a 1 minute break, but I would not use this break as my invalidation, because here you have some supply created. Technically you can use this whole box, so this is supply, and that last move is very aggressive, so then I will not use this as my breaker structure, put your stop right there. What I then want to see is a bit more price action. So what we see here is that price came up, came down, tested supply, came back down, and then got a aggressive sell to buy. So sellers pushed price down into this demand, then buyers took over. And what can you see even on the very, very low time frame? That you're 1, 2, 3, local 3 drive. This is showing absorption by buyers. So you have people selling, but this is showing absorption because price doesn't want to go lower. You are also at your close to your third step of your Wyckoff, close to the deviation threshold. So this is a level you want to protect price. At least your room of error is very low here. So that's a clean PY. Then technically here you had your breaker structure. Bullish breaker structure, flipped this supply into demand. So this is like a flip zone. And I was looking live at it. I also shared that this was a potential outcome. But the moment we broke above, you already directly had an aggressive candle. So getting the entry here was pretty hard. Technically, you could enter after the 1 minute close above. Put your stop right there, target the local range high. That would have been a nice trade. But yeah, as I said, you did not get the retest because technically you created a range demand right here. So I would have loved to see a retrace into this range demand, get like this, boom, structure confirmation, and then long it, because then you mitigated this demand. Right now we didn't, so missed the entry, but yeah, technically it was a nice trade. And then zoom out, what do we have now? I see sellers taking over right now. That's good because, as said, I've took liquidity. These were our weekend highs, which was my main target. Liquidity there, and then second target was this supply, and we can see that price perfectly tapped that. So that is, in my opinion, now mitigated right here. This demand failed, and this local range played out. So if you look at the local level, price hit the technical target of the local model here, then pushed higher into supply. Let's delete this for a moment. And then even here you can see that price came into it with exhaustion. Not too good of a range, but you can see 2, 3, you break it back to bearish right here. So this is the lower high, brings you to that higher high. This is your bearish break of structure. And then from here, sellers stepped in. Shorts, yeah, like here, a lot of longs getting wrecked right now. So right now we have some new supply created right here. Let's see. So that's a local PY for potential shorts. We are in New York. So this is a strong New York high by now. Let's see at the P1 hour 13 into supply. We broke local structure. Did we also break 50-minute structure? Yeah, so we also broke a 50-minute. Also back to bearish break structure. Some local supply created. Let's see if we have, technically this whole range is now range supply. So you can look if we get like a slow move up here into here, then you can potentially look for shorts back down to potentially the range low. But we have FOMC later this evening, so I will not be surprised if we just chop around here. And this is also not the level where you want to do business, because we are basically at the mid-range, or right at the mid-range. Let's see. Yeah, price is right at the mid-range. Demand below, supply above. What is the volume profile? Yeah, we have demand here with POC and demand. So this is a PY. I'm interested in potential longs again if we get a slow move into it and then break structure. Not interested if we do this. Beside that, I'm not gonna take new trades before FOMC. Let's see, we have made, if we zoom out on the weekly, let's delete this and just keep this on. So we have taken out this supply right there. We have demand below, basically in the middle of the range, so no edge right here. I only wanted to do business at the range high or range low, or like local in between scalps right here at this local supply PY. But yeah, we have FOMC, so I'm not too interested in that. What we did on the bigger picture though is that we created a new weekly high on today, on Wednesday. Our low is on Monday right here. So this is P1, this is P2. So the weekly statistics have flipped bullish, in which this is a strong low, this is a weak high. So if FOMC doesn't do anything super weird, then statistically it's more likely to hold this low and take out this high later in the week. And then we maybe can make our way up to the local range high right here, and potentially even the last week's unfinished weekly candle. So let's see what FOMC has to bring. Quick view at the statistics. Here daily is still bullish. Let's see where our daily low is. Now that's close to sweeping out, but it's also at mid-range, not super interesting. But here we can see 12% of the days took out weekly P1 based on timing, and 23% took out the weekly P1 on distance. So low chance to take out the weekly low right there. And 85% weeks form a new P2F Wednesday, and 96% made a bigger move than 4.6%. So if this low holds, it is very unlikely that this high also holds. So then we have a big chance to make new weekly highs. One thing to keep in mind is that we have a warning sign. 96% of the weekly lows have a bigger wick. So if we look at the weekly with a small wick to the downside, so 96% of the weeks have a bigger wick, but yeah, like last week we had no wick to the upside and that candle also survived, so not giving too much weight to that. For now, just playing this range till it stops working. Let's see what FOMC has to bring, and thanks for watching again.